In this video, I want to talk about how to start 2025 strong as an investor. If you're watching this video, it means you are a stock picker, you invest in individual stocks, and how do you perform well in 2025? Okay, so let's start. And I will say that for 2025, can I write? Yes, I can write. For 2025, there will be a few themes in the market. The first theme is inflation. Will inflation rebound? Inflation will be sticky, but how much inflation will it be? What will be the inflation rate during 2025? 2%, 3%, a rebound to 4%. Now that you have a new presidency in the US, maybe that will lead to more tariffs that are inflationary. Maybe it will lead to more drilling in the US. So supply and demand for oil prices, impact on commodity prices, and inflation. This is a key theme for 2025. The other key theme is the interest rates. The interest rates will be very important for 2025. Everybody is expecting the interest rates to drop in the US. Now the mortgage rates in the US are 7%. It's very expensive to buy a new house. If interest rates go down, the mortgage rate will be lower. More people will buy new houses. You will have more demand. That can fuel the real estate market. And if you have the reverse situation where interest rates are increased, well, it will be bad. It will be bad, and nobody expects this. So you can expect the stock market to drop. You can expect the real estate market to suffer greatly. These two things are key themes for 2025. Another important theme is AI. AI. You know AI, you know it will generate a lot of growth. Nvidia, Google, Meta Platforms, AMD, you have a couple of names and you can benefit from AI if you invest in great companies. That will be, I would say, the three key elements to watch for the whole year. One will impact the other one. One will impact the others. It will be very important. If inflation is high, interest rates will not decrease. It's likely that interest rates will stay the same or even increase. And high interest rates will lead to high cost of debt, which may reduce AI investments. Small players that have a lot of debt will suffer, and the growth in AI may be reduced. So everything is interlinked, right? How to have great performance in 2025? You want to fill your portfolio that will survive in these different scenarios. Either inflation is high, inflation is low. You want to be invested in companies that will do well regardless of these three segments. So the first element to start the good way is to focus on these three things. You focus on these three macro environments, and it's very likely that you will do well. I don't do a lot of top-down approach, macro approach, but if you have to do one, this would be my opinion for 2025. If you look at the returns on average, I'm sure if you take care of these 3 points, you will make much more money. That in case you didn't do it. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The second point, because we are wary of interest rates, is to focus on companies with low debt. Low debt. Debt will definitely be a problem. Debt will definitely be a problem if we have interest rates at 5%. It will cost 4 or 5% to have some debt. And I see some small caps, mid caps, small companies with a lot of debt and have to renew their debt, reschedule their debt. And now the debt is not 0% like it was during COVID time. Now the debt is 5%. It's costly, and you will have interest expenses, and that will be a drag on net income. So my advice for you is, if you want a good 2025, avoid companies with a lot of debt. Focus on companies without any debt or with low debt. That is very important. Thirdly, because you wanted to talk about macro industries, I would only focus on companies that have a growing market in 2025. or 2026. A growing industry. Let me put G here. Like Meta platforms and Google are in the digital media, advertising. This is expected to be a growing industry. You look at Amazon, they are a little bit everywhere in growing industries. You have Netflix, so media, digital, movies, growing industry. You have Evolution AB, online gambling. The world is moving into more online casinos, so this industry will grow. If you only focus on companies that are in growing industries, the TAM, the total addressable market, will grow accordingly. And it's much likely that your revenue will grow. And one of the important aspects of stock price, the correlation between the stock prices, are the earnings per share. If the earnings per share grow, most likely the stock price grows. So how do you boost your earnings per share? You boost your revenue, you boost your efficiency. So you focus on these three aspects. You focus on companies without any debt or with very low debt. You focus on companies with growing industries. And you focus, let me put fourth, you want companies that are growing their earnings per share and revenue. You want earnings per share / revenue, or revenue. That is very important. And the fifth point, and I will end with this one, is, well, you can stay within your circle of competence. That's I didn't mention it, but that's mandatory. Just don't make a stupid bet on a company you don't know well. Just focus on the companies you're very familiar with. And the fifth thing is, don't avoid paying a reasonable price. You want to be mindful of the valuation, V for valuation. You want to pay a low PE ratio, a low price to free cash flow. I'm not telling you to buy a PE ratio of 5 because you will have bad companies at very low valuations. But don't be extreme. Don't invest in companies with PE ratios of 70. You have plenty of great companies right now trading in the market with the expensive valuation. PE ratio of 60, 70, 80. So don't fall into this trap, please. If you want a good 2025, given the environment, interest rate, inflation, and with Trump as a president, you will have a lot of volatility. Most likely, you will have a lot of notifications, tweets, threats. You will have a lot of movement, volatility in the market. Volatility is back. I mean, you remember with the first presidency of Trump between 2016 and 2020, markets were very volatile. This is the way he makes deals. So just that this will be a volatile year. You know that valuations will move in the market. And if you invest in high valuation, expensive valuations, you will be disappointed. So I will focus on companies that are quite cheap, good business model, earnings per share growth, revenue growth, growing market that will do well in any market, in any environment, low debt, and you want a PE ratio below 30 or a price to free cash flow below 30. I would say this is a good threshold. Now the S&P 500 is trading at a PE ratio of 30. So anything below 30 is below the market average. So you can take this as a good threshold, a good benchmark for the valuation. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.